Sehr geehrte Damen und Herren, möchte ich recht herzlich begrüßen von der Rohstoffinvestment-Konferenz 2014 hier in Vancouver. Wie immer sind wir auch hier wieder auf der Suche nach interessanten Gesprächspartnern. Wir haben heute Chris Berry bei uns. Er ist mit House Mountain Partners. Und hi Chris, thanks for joining us here in Vancouver to do a little interview. And can you please tell our audience a bit more about House Mountain Partners? What's about it?
Sure. So thank you very much for the opportunity to chat with you today, first of all. And, with respect to House Mountain Partners, this is a research shop that I've set up with my father about 3 or 4 years ago. We co-author a newsletter that focuses on discovery, and that is discovery typically in the small capitalization space with natural resources, with biotech, with infrastructure and technology. And we are longer-term big believers in what we call quality of life. This quality of life cycle emanating typically out of the developing world, the emerging markets where, everyone focuses on China or India as the big examples, but I think a compelling case for growth can be made in other parts of the world, Indonesia, Colombia, these countries that have growing middle classes that have a quality of life or a standard of living much lower than we do in the United States or Canada or in Europe. And so, what we do is go out and find those investment opportunities across a diversity of sectors that we think are well placed going forward, given this quality of life backdrop.
Okay, so that means for you that there are a lot of commodities will be much more used in the future because of that, what you told us.
Absolutely. We think that technology obviously plays a huge role in how resources are used going forward, but generally speaking, you have a population, a global population that is forecast to grow on a net basis out to 2050. I mean, I've seen indications of a global population of 9 to 9.5 billion citizens, up from about 7 billion today. That's about a 30% increase. And again, because of quality of life and because of so many individuals joining this sort of global middle class that we referenced, I think you're going to start to see a lot of people live more commodity-intensive lifestyles. And that means more copper, more iron ore, a wealth of different metals and minerals going forward. And that's why we're, particularly bullish longer term on the commodity space.
Okay, so we saw a price drop from copper to silver to gold during the last 1.5 years. What's your thought about that? Will it rise up again? I think so, as you mentioned now, that everybody needs these things in these special lands.
I think for starters, each commodity, each metal or mineral has its own supply and demand dynamic. So I think having a near-term and a longer-term view on copper is very important, but I think it's dramatically different from, say, rare earth elements, for example. Over the last 10 years, we've seen some parabolic rises in the prices of a number of these commodities. And so to answer your question specifically, I don't think we'll see broad-based parabolic rises in commodity prices anytime soon. And it's because of a number of macroeconomic factors that we can talk about here in a minute. But I do think, generally speaking, you'll see firm to generally higher commodity prices in the future. But again, it's different from one commodity to the next.
That might be true. So your most favorite commodity is copper or silver or gold or all three of them?
Yeah, I think that most of the work that I personally do focuses on what I call the energy metals. Okay. And that's just a phrase that I have coined. And again, it comes back to this whole middle class growth dynamic. If you go back throughout history, any society has sustained itself or grown based on the back of a growing and strong middle class. And so I look at those metals and minerals that help that happen, specifically the metals and minerals involved in energy generation or storage. So, your question really speaks to the viewpoint, what do I think, say, 10 or 20 years out? Right now, I'm very interested in uranium.
Okay.
For, again, the whole sort of energy aspect of the energy argument. I do like copper. Copper is one of the industrial commodities. It's actually held up very well in the last 18 to 24 months when we've seen a rout with so many other commodities. I'm nearer term, say over the next 12 months, I'm particularly interested in silver. And I'm interested in silver. You know, the monetary metal argument is one angle of it, but in particular, I like it because I do see over the last, say, 6 to 8 months, I've seen industrial demand start to peak up a little bit. Again, things have slowed down in the emerging markets like China, but here in North America and Canada and the United States, industrial production, purchasing managers index data seems to indicate industrial expansion. And the Eurozone has come out of what seemingly an endless recession. So, you know, we're looking at tepid growth over there. So, you know, I'm not predicting much higher silver prices as some other forecasters are, but I do think that, you know, the bottom for a lot of these commodities, silver in particular, is already in.
So you think the silver price will rise a bit more than the gold price? So
silver
because it is a kind of industrial metal,
absolutely.
So it gets used and
that's one of the reasons why I really like silver. It has dual uses. Obviously,
yes.
Again, you have the monetary metal argument, but it's predominantly an industrial metal. And when I see industrial data, again, not just 1 month sort of data, but 6 to 8 months of improving data on a global basis, it gives me, you know, hope that I think we've seen the low for silver prices. And I'll just say one other thing. I think so many, when you talk about gold and silver in particular, so many people are focused on, you know, market manipulation, and that's a whole other argument. But I think at the end of the day, you also want to remember that just like any other commodities, gold and silver have their own supply and demand dynamic, and there is an all-in sustaining cost to produce, you know, an ounce of silver or an ounce of gold. And based on the analysis that I have done right now, the all-in sustaining cost for an ounce of silver is about $21 per ounce US. So here we are at $20 silver. So if you think about the industry sort of contracting, eventually supply and demand will normalize, and the silver price has to come up to meet that actual cost.
Let's come once back to uranium. Why do you think uranium will be the metal what will go rise up again? Because we saw a lot of things what happened in the past with Fukushima, and okay, I know Chinese are growing very fast. They need a lot of power. And do you think there would be a demand of uranium in the past, in the future?
Certainly, you know, the accident in Fukushima has given uranium a bad name, or a dirty name, if you will, and you know, rightfully so. But again, you have burgeoning middle classes. No middle class grows or sustains itself without access to reliable and affordable energy. Right now, again, we can argue about prices and subsidies, but uranium and nuclear energy in particular is one of the most cost-effective, greenest, energy-dense forms of electricity. So you've got what's going on in China with the reactor build out there, similar in the Middle East, all over the world. Not to mention the fact that the reactors that are already in service, yes, sure, some of them have been shut down, a couple have been shut down in the United States, but you know, the uranium there needs to be replaced every sort of 18 months or something like that. It depends on the size of the reactor, but you have a current fleet of reactors which will indicate a certain level of demand, but you also have an increasing number of reactors out to, say, 2020 that will require additional uranium demand going forward.
Okay, sounds interesting. So you must have some favorite stocks, what you can maybe tell us, and maybe are you also invested in these stocks? Sure.
Well, as long as we're talking about uranium, one company that I've owned for a while is Uraners. This is one of the other things that I did not mention earlier about uranium is there's obviously, just like anything else, a cost of production, a cost to get it out of the ground. And one of the real challenges that major uranium producers are finding right now is that with the spot price of uranium at, say, $36 a pound, you know, the term prices are a little higher, say 50 to 55, but you know, unless you have much higher uranium prices, hard rock uranium mining does not make economic sense. So a lot of these guys have stopped. So that said, and this leads into Uraners. Uraners is on the verge of production from one of their mines in Wyoming in the United States. When I say on the verge, within the next sort of few months, my understanding is they will be producing uranium through in situ recovery.
Okay.
So this isn't traditional hard rock, underground, or open pit mining. This is in situ, where they basically use water and chemicals to pump it out of the ground and produce it that way. The reason why I like that is because it's an extremely low cost of production. Again, generally speaking, in situ production, it varies from different parts of the world, but you could see an all-in cost of, say, $30 to $35 a pound to produce it. And again, that's a very rough estimate. But, the other side of the coin is you turn around and you say, okay, it costs me $35 a pound to get it out of the ground and produce it, and then I can turn around and sell it to a utility for a longer term price of, say, $50 to $60 a pound.
Okay.
Again, these are very rough ballpark estimates, but for a hard rock producer where it costs you $60 or $70 a pound to get it out of the ground, there's no margin, so they're not going to do that. So I like Uriners because it's a near-term production story. It's financed, it's ready to go, it's got great management, it's in also a very reliable geopolitical jurisdiction, the Western United States.
Safe.
And so I'm expecting good things going forward.
Okay. Chris, thanks a lot for the interview, and I think that is a company what we will look after, and thanks a lot again taking time for us.
Absolutely, thank you.
You're welcome.